Hello, I'm Hazem Seeker. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, crippled by its currency crisis, Venezuela's economy is in freefall. How did it get to this? Also, we talk Tesla and ask when the fledgling car maker might start delivering on expectations. Plus, as Greece emerges from years of bailouts, we look at how austerity has affected the nation. Well, it used to be one of the richest countries in the world, but now oil-rich Venezuela is suffering from runaway inflation and its national currency has become almost useless. President Nicolas Maduro is blaming all of this on what he says is an economic war against his country. The turmoil has seen millions flee Venezuela's economic hardships for neighboring countries. The International Monetary Fund predicts inflation will continue to rise by up to 1 million% this year. To put that into perspective, Venezuelans are now paying about 2 million bolivars for a cup of coffee. In order to tackle the problem, the government has introduced a new currency, the sovereign bolivar, which will remove 5 zeros from banknotes. It's linked to a cryptocurrency called the petro that's pegged to the price of oil. Now, the government is also raising the minimum wage by 3,000%. And faced with a squeeze on the country's cash reserves, President Maduro wants Venezuelans to pay more for what is currently the world's cheapest gas. Our Latin America editor Lucia Newman now has more on this from Caracas.
Venezuelan government supporters try to rev up enthusiasm for newly introduced economic measures, described by President Nicolas Maduro as an economic revolution to defeat hyperinflation. Yet conspicuously absent from a rally in front of the presidential palace was Maduro himself, who hasn't made a public appearance since an apparent assassination attempt on August the 4th.
If the right wing crosses our path, we'll run over them like a train. Nothing will stop our reforms.
Just blocks away, many shops and markets remained closed, some adhering to an opposition call for a national strike. Others unsure how much to charge now that 5 zeros have been slashed off the currency, ahead of a compulsory 3,400% increase in the minimum wage. They go into effect September 1st, but the price hikes aren't waiting.
2 hours ago, these eggs cost 1,500, and when I came back with the cash, they were 2,000.
The bus company that takes Venezuelans to the border remains shut until further notice.
And that's not all. The webpage to recharge mobile phones for the moment is not operational. One of the few things that has not changed price are these bananas. They're now costing 5 of the new bolivares, or 500,000 of the old ones, which is roughly the same if you take away 5 zeros. But according to the people selling them, by next week, they'll probably go up 300%.
The government blames a crisis that's brought unprecedented hunger and illness on what it calls a domestic and international economic war. But many economists warn the new measures will only make things worse.
They're implementing fiscal measures to increase revenue, while refusing any type of international financing or aid. So they'll keep printing out money. And we'll see that hyperinflation will not stop.
And amid the uncertainty, neither, it seems, will the exodus of Venezuelans desperate to find relief anywhere they can. Lucia Newman for Counting the Cost, Caracas.
Well, let's speak now to Carlos Cardenas. He is the head of Latin America country risk with IHS MARKIT in London. Thanks very much for being with us. So I think it's worth, first of all, just taking a step back here for a moment and asking, how did Venezuela get to this point, such an oil-rich country? How did it get so poor?
Well, I mean, it has been a combination of factors. As you mentioned, Venezuela is an oil economy, and the decline in oil prices had an effect. But in reality, it has also been accompanied by indiscriminate public spending via the printing of currency, the implementations of draconian price and exchange controls that were never relaxed, a policy of expropriations. Many of the expropriated companies ended up being mismanaged and bankrupt, and all of this compounded by economic mismanagement and widespread corruption.
And how have U.S. sanctions affected Venezuela's economy? Is there any way of measuring that? Is there a number at all that we can put on that?
The key issue about the U.S. sanctions is that they have operated in two ways. One, they have targeted top individuals of the government elite in an effort to promote regime change. The Venezuelan authorities have obviously denied it or been against that. The other one, and the most critical in terms of the economy, is that the sanctions prevent Venezuela from restructuring its debt. Venezuela currently it's in a position of technical default because of the depletion of the foreign exchange reserves. It doesn't have the ability to honor any payments to bondholders or to any company that operates in Venezuela, but it also is not able to restructure that debt in the U.S. financial system. Regardless of the sanctions, the key issue here and the key connection to the economic policies that were recently implemented is that the authorities are still also unable to present a credible economic package or program that would take out the economy out of the current crisis. No? So that, in combination with the U.S. sanctions, make the economic and political situation more and more difficult.
By credible, I assume you're talking as well about this new currency that they're introducing as well. Is that going to do anything to address the current economic problems?
No, our view is that actually the situation is going to get more difficult in terms of the economic and political environment, and we're going to continue into the intensification of the hyperinflation that we have at the moment. The currency is pegged to a cryptocurrency that hasn't been really properly implemented, and where also any type of investor is prohibited of participating in that because of the U.S. sanctions. But at the same time, in order to prevent any type of social unrest, the government will have to continue printing currency. It has multiplied the minimum wage by more than 60 times. It has promises bonuses for people to contain them. And even though they have announced that fuel subsidies will be relaxed, the reality is that they have also said that those that hold the Fatherland ID, which is a special ID card that it's given to the poorest of the population, would still receive that subsidy. And also, overall, it will have a very little impact. And the critical point here is that oil production continues to decline. International reserves are not enough to cover any type of imports. And the government is unable to restructure its debt and obtain more financing. No?
Carlos Cardenas, good to speak with you.
Thank you.
Now, it's been a busy week for Donald Trump, who has been pushing ahead with his America First agenda. Negotiations with China over trade tariffs failed to reach an agreement. The U.S. president imposed new sanctions against Russia, and his row with Turkey over tariffs sees no signs of abating. SHIHAB RATTANSI looks deeper now at how the Trump administration is using its financial muscle to go after those it thinks are adversaries.
The Trump administration has been setting new records with its imposition of sanctions on foreign entities, though it is continuing a trend we saw under Barack Obama. What is different is the imposition of economic tariffs. This administration overtly views the dollar as a weapon and the globalized economy as a battleground. The numbers had been climbing prior to Donald Trump's presidency, but according to the U.S. Treasury, sanctions were imposed on close to 1,000 entities and individuals in 2017, a new record. And this year, analysts predict the administration will surpass that number, potentially adding more than 1,400 entities to the list of those sanctioned.
He's a president who came into office without much sort of government experience, if any, with very limited in the way of sort of relationships with people on the Hill or the broader executive branch. And what sanctions lets him do is execute foreign policy effectively on his own.
It is unclear sometimes whether the U.S. has a grand strategy when it imposes sanctions. Is Washington trying to change the behavior of those it deems as working against U.S. national interests, or simply punishing them without any opportunity for redemption? And does anyone really believe that Russia will forsake Crimea, for example, as a result of sanctions? What exactly is the U.S. trying to achieve? In the rush to project U.S. power, such questions sometimes remain unanswered. At least with the Trump administration's imposition of economic tariffs, there would seem to be a goal. President Trump says other countries are exploiting the U.S. economically, and that needs to end.
And that is why we are going to stick together and win for our farmers and our factory workers, our steel workers, here we are, all across this nation.
The imposition of tariffs began in January with restrictions imposed on solar panels and washing machines. The Trump administration said it hopes to boost domestic manufacturing. Since then, China has borne the brunt. Tariffs have been imposed on $34 billion worth of Chinese imports. They went into effect July the 6th. And tariffs on an additional $16 billion of goods. They went into effect August 23rd. In addition, 25% tariffs on steel and 10% on aluminium imports have shocked allies such as Canada, Mexico, Japan, and the EU. Turkey's tariffs have meanwhile been doubled to 50% on steel and 20% on aluminium. Yet here, too, there is confusion. In imposing the steel and aluminium tariffs, Donald Trump invoked national security. Yet his administration is using those tariffs as bargaining chips in trade negotiations. How does that square with keeping America safe? There has long been international grumbling at the centrality of the US dollar and financial system to the global economy, and it is likely that the frequent deployment of both as weapons, often with little recourse for those affected, will heighten those complaints in the future. SHIHAB, RATTANSI, Al Jazeera, Washington.
All right, still to come on Counting the Cost. We look at why 8 years of bailouts for Greece have led to a brain drain. Now, electric car maker Tesla has a value of between $60 and $70 billion. It's been trading as a public company for 8 years, but it has never made an annual profit. Elon Musk's vision of integrating clean energy with transport and home power, some might say, is the perfect marriage. But is Tesla on the cusp of profitability, or is this a bubble? Well, joining us now from London is Arash Massoudi. Arash is the corporate finance and deals editor at the Financial Times in London. Thanks very much for being with us. So first off, what is the latest that you're hearing on the company possibly going private? Obviously, Mr. Musk has been tweeting about this, and then it's caused quite a ripple in the financial community. But what exactly is going on?
Well, so I think we should probably start at the beginning, which was a story that I broke with the Financial Times, that the Saudi Sovereign Wealth Fund had secretly, kind of quietly built about a 4.6% stake in Tesla. We broke that story roughly 2 weeks ago, and it sparked a chain of events which has led us to where we are now. 30 minutes after our story broke, Elon Musk took to Twitter and said he was considering taking Tesla private at a 20% premium or so to where the stock was trading, saying he had the quote-unquote funding secured. And that basically unleashed this chain of events, which is roughly, as far as I can tell, unprecedented in terms of corporate finance and takeover battles in history, where a CEO takes to social media and amplifies another organization's story and basically uses it to really change the narrative around his company. So where we are at the end of these 2 weeks is really not much further than when we started, because Musk may have taken some actions which violated SEC policies, Securities and Exchange Commission policies, which have sparked a series of investigations into his actions, and as a result also left him scrambling to put together this plan and make it look like there was actually more meat than there was on the bone. And so at the moment, banks are all running around trying to figure out whether they want to even work with him on this, because it's such a wild idea and proposal and seems seemingly unrealistic, and at the same time not wanting to miss out on potentially the largest leverage buyout in history.
And on the all-important question of profitability, which we mentioned at the top there, when do you think it might turn a profit?
I mean, there's no indication that Tesla will turn a profit anytime soon. It's burning cash at a phenomenal rate. It can barely produce a couple thousand cars a year. It can't keep up with demand from consumers. And so there's no sign of profitability in the foreseeable future. And then you read constant stories about problems with the cars, problems with deliveries. It's a sort of endless stream of negative news. But what keeps this company going and what keeps the belief of investors there is this sort of cultish icon of Elon Musk, where he can captivate the market into seeing his vision, and he just dreams big. We're in a world where, as one person wrote, Silicon Valley entrepreneurs are creating these really micro startups that really have no real direction, but will create sort of very profitable companies for their enterprise and some sort of back office software. Well, Elon Musk doesn't do that. Elon Musk sets visionary ideas out and says, I'm going to change the way transportation works. I'm going to change the way energy works. And then he lays out these really attractive narratives, which obviously in a world where there's a bunch of small ideas, we all want big ideas. And so that can captivate the market and investors who are willing to back an entrepreneur. But the facts and the details, when you dig into them, present a much murkier picture. And that's why so many people have bet against Tesla's stock. It's one of the most bet against stocks in the US market. And there's a lot of people who expect this company to come crashing down and have bet a lot of money against him. Yeah, well, that gets to my next question then. Is this really sustainable? I mean, if you talked there a lot about the negative side of this, the money they're spending, there's problems with supply lines and all. Is this a bubble that's going to burst? Well, I mean, it's sort of, the Tesla story is part of our story of where we are in the world right now. There's so many different bubbles that we're in. We're in a real estate bubble, we're in a technology bubble, and Tesla sort of encapsulates one of these bubbles. Now, the way that they can get through this is if they actually just focus on building cars and delivering and meeting their demand. I mean, that is clearly the best way to run this company. If he can meet the thousands of supply orders that he's already registered and deliver those cars to consumers, then you can see a foreseeable run rate for Tesla to survive. But this is a company that produces a fraction of what Ford, GM, et cetera, produce on an annual basis, and yet has a higher market value. And at some point, reality will catch up if Musk can't deliver.
Why would Elon Musk want to bring the company into private hands? Like, what would be his motivation for that?
Well, again, that feeds into one of the themes of our time, which is that the markets are extremely short-term oriented, right? Investors want returns, they want profits. If you think about all the activist investors who are squeezing pennies out of companies and torturing CEOs for more capital returned or more aggressive action, we're sort of in this rampant environment where hedge funds and portfolio managers are demanding maximum amount of stuff from big companies, and oftentimes it's very hard to deliver. And you couple that with someone with the ego of Elon Musk, which must be among the top 5 biggest in the business world based on his behavior on Twitter. That's the only rational calculation one can make. You can see how that would be deeply offensive to someone, and you can see through his actions that it's almost a personal vendetta, that he wants to burn the short sellers and prove them wrong. And so this has created an incredible distraction around his company and himself, where he's not focusing on the execution. So I think part of his argument is, if I can get this company private, then I don't have to deal with these massive distractions and I can focus on doing that. Problem is that it's really cute to want that, but also you relied on the public markets to get to where you are. You didn't magically become a $60 billion company without having sold things to investors and sold things to the public. And so to then say, actually, the public be damned, is a bit of a hypocrisy in its own sense. So there's a lot of questions here that still remain unanswered. One other major topic that is relevant here is the corporate governance around Tesla. The board includes his brother. Its quote-unquote lead independent director is someone who's been named in court filings as his close friend. So it's basically a mockery to corporate governance, the Tesla board. And therefore, that's another big issue that's under examination now. How can a U.S. company have such a captured board that is close to the CEO? And the board is very much on trial right now. So the last 2 weeks have really been a story about the board and the special committee of the board desperately fighting to maintain some semblance of independence so they don't get sued to death.
What would the implications be for Tesla shareholders if there's a private buyout, both institutional and individual shareholders? Talk us through what's involved for them there.
Well, so in a traditional sense, if you want to take a public company private, the easiest way to do that is a quote-unquote leveraged buyout, where you take a slice of equity and a bunch of borrowings, you saddle the company up, you offer a premium to the share price, and then everyone gets the premium and sells their shares, and then you take the company private with your new ownership team. Unfortunately, that only works when you have a cash flow positive company, because creditors don't want to lend you money if you're burning through money and you have no capacity to pay back the money. So to basically launch the world's biggest leverage buyout in history is impossible here, and therefore none of the world's major banks will participate in such a plan, because Tesla doesn't have the capacity to repay its debts. It's burning through cash, as we've established. So then you have to find another way. And so the idea that they're discussing is this quote-unquote going dark philosophy, where a small group of shareholders will buy out other shareholders and take the company private with minimal equity checks, which is why everyone got excited about the way Musk spun the Saudi line that we broke. But unfortunately, my reporting suggests that the Saudis have no intention of sort of funding an extra, $5, $10, $15 billion to take the company private. And if they had discussions, it was very, very informal and not of the nature and development that Musk might have suggested through his tweets and his subsequent communications to the market.
Just to pick up on the Saudi connection, why would the Saudis want to finance Tesla's exit from the stock market then? What's in it for them?
Well, no discussion about Saudi Arabia can take place these days without discussion of the Crown Prince Mohammed bin Salman, the sort of gregarious 32-year-old who's leading the country, trying to transform its economy. And the vehicle through which he's doing that and to take the country's reliance off of oil is the Saudi Sovereign Wealth Fund, which is called the Public Investment Fund. It has about $250 billion in assets. He wants to grow it to $400 billion by 2020. He wants 25% of those assets to be in overseas holdings. And that's why, and he's clearly a guy who's attracted by people who have big ideas, who are trying to really change industries. That's why they went and invested $3.5 billion in Uber. That's why they gave $45 billion to Japan's SoftBank and Masayoshi Son to have this incredibly large tech investment fund, which everyone has been talking about for the last 2 years. It's why he's put $1 billion in Virgin Galactic with Richard Branson. It's why he's put up to $20 billion with Steve Schwarzman and Blackstone. And this is very much in line with those bets. A big entrepreneur trying to change an industry, potentially even a hedge to Saudi Arabia's oil-based economy by investing in electric cars and with Elon Musk. And the way I reported the story was to say that when Mohammed bin Salman went to the U.S. in March and April of this year, he in Tesla soon after, he and the Saudi Sovereign Wealth Fund soon after approached Tesla and said, we'd be interested in buying newly issued shares to both help support your company, but also we'd like to be an investor. And Musk, for whatever reason, did not accept that offer. And so the Saudis, with the help of JP Morgan Chase, built the stake in the Tesla stock in the subsequent weeks and months. And it was private until I broke the story.
Arash Massoudi, good to speak with you.
Thanks.
Greece is celebrating the end of 8 years of bailouts. It's avoided bankruptcy since 2010 through $300 billion of loans from the International Monetary Fund and the European Union. But alongside the punishing austerity policies Greece has had to abide by, there was also a human cost. John Saropoulos takes a look at how changes in society have affected the country's youth.
Prime Minister Alexis Tsipras may have been trying to cast himself in the role of a hero when he chose Ithaca to send a message to the Greeks that their economic odyssey is over. This is the island Homer's hero Odysseus finally returned home to after 20 years of war and adventure.
Today, a new day has dawned for our country, a historic day. The bailouts of austerity, recession and a social desert are finally over. Our country regains the right to shape its own future and fortunes, like any normal European country, without external duress, blackmail or sacrifices by our people.
For this group of young people, the news comes too late. The economic crisis struck at the beginning of their teens and changed their lives. YIORGOS IOANNOU is studying political science, but what he really wants to do is 3D animation. There's no market for that here, so he'll go abroad.
My parents had invested everything in government bonds. We lost everything. It had a huge effect on our psychology, and it immediately changed how we lived. It was as though you had flipped a switch.
Stefanos Gonatas is studying molecular biology. The Greek genetics market is shrinking as people have fewer children, so he plans to end up in the United States or Canada. And Lucianos Gomis has a job waiting for him upon graduation at a UK company.
My parents are divorced. The moment I realized there was a crisis was when I watched my mother counting out money to pay utility bills. I thought I have to finish school and find a job quickly so I can help my family. I have 2 smaller siblings and they need a chance to grow up too.
All 3 would prefer to stay in Greece. They just don't think this economy will produce the jobs they want, nor do they believe Greece's political elite can create that economy.
At least 500,000 young, educated Greeks have emigrated over the past decade in search of better jobs, and that brain drain is likely to continue. Greece is forecast to grow by only about 2% a year for the next 5 years. But over the same period, it's obliged to spend at least 3.5% of its economy per year repaying debt. So its gains will be swallowed by its commitments.
The markets Greece will now depend upon for its borrowing are looking for signs of stability. That includes keeping up debt payments. But not everyone believes it can. Yorgos, Stefanos and Lucianos all studied the Odyssey in school. They're well aware that Odysseus was the sole survivor of his homecoming expedition. All his men perished. Whether Tsipras has done enough to ensure Greece's survival, as well as his own political survival, remains in the lap of the gods.
And that is our show for this week. Remember, you can get in touch with us by tweeting me at Hazem Seeker and use the hashtag AJCTC when you do, or drop us an email. Counting the cost at aljazeera.net is our address. And as always, there's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. So that's it for this edition of Counting the Cost. I'm Hazem Seeker from the whole team here. Thanks for joining us. The news on Al Jazeera is next.